Hello, I'm Marius Alexa. Welcome to this new edition of the weekly currency outlook here on JitneyTrade TV. JitneyTrade TV, the market information side of JitneyTrade. The ideas I want to discuss with you today are that commodity currencies are currently getting bid as the together with the single currency, obviously as the US dollar gets offered and as the yen crosses some buyers returning in the market altogether, while fear retreats a bit more. I think the connection to make really is that liquidity is on an early expansionary phase for the weeks and probably a couple of months directly ahead. That essentially means that the rally in the US dollar, which 2 weeks ago we announced that was due for an end, is probably terminated. This essentially means that commodities have reached probably lasting lows, at least lasting short-term lows that will take us into the next year, and probably that will be helpful as well to the equity markets in general. But let's look at a couple of charts here. So in the Canadian dollar, we allowed for a return eventually near the 130 area. What we're seeing, is a repel at the previous high. This is happening in conjunction with a repel in the daily relative strength indicator. It is our contention here that it would be logical to get from the current position, irrespective of whatever short-term test of the 126, 128 area we may or may not get at this stage. I think it's logical to expect for the weeks directly ahead a return near the 117, 119 in the USD CAD. If not, a straight line collapse into the 111, 113, support basically the low end of the short-term trading range. In the Australian dollar, which is sort of a sister currency to the Canadian dollar because it's related to commodity prices, much like the loonie is, we are seeing a successful retest of the lows. That persistent bullish divergence we've seen for many, many weeks. We're still kind of hoping on seeing at least the upper end of the short-term trading range near the 73, 75 cents area. I think in absent, a push below the 60 cents area, in which case we will likely find buying only near the 55, 58 cents mark. I think that the Australian dollar is due to rally as well in the weeks directly ahead. In the single currency, I maintain the outlook for a developing fourth wave. That essentially means that we will be, sideways for some time. There's nothing too exciting going on for the time being. There is a bullish bias that will probably pertain to a developing test of that previous fourth wave near the 133, 135. I would expect prices to face some overhead resistance up there and to turn back within the range. A range which is basically more or less a 123, 133 range, for the months directly ahead. Be careful once we see the upper end of the range near the 133 mark. If you see an overbought market condition in terms of daily RSI, that's probably the sign that you want to get out as this upward correction wears itself out. An idea that I think can be particularly interesting for people trading equities is that you may or may have not observed that yen crosses, that is euro yen and sterling yen, which are correlated inversely directly with the stock markets through that perspective that you see when liquidity contracts, you see an unwind of the carry trade. And when liquidity expands, you see, a renewed pressure to the upside on the carry trade crosses. Is that, basically these related markets, meaning the yen crosses and the equity markets, delivered some type of short-term non-confirmation, which I think can be particularly helpful for equity markets in general. That is, while the S&P 500 and the other, world indices made new lows, now in late November, the euro yen and sterling yen actually just tested their previous lows and did not make new lows. And as you can see, basically this inability to make it to new lows in the yen crosses, comes at a point in time where, you know, the daily RSI study for euro yen, and you will see shortly for sterling yen as well, is telling us that there is more room to go. The 133, 135 yen area is targeted in the euro yen at the very least, and probably the 162, 165 is what we should expect in sterling yen. And again, as this, you know, as yen comes under pressure, as liquidity begins to expand again in the global financial system, expect, you know, continuing at least bounce, if not rally, in the equity indices. An outlook which, in my opinion, is also consistent with what we're seeing in the VIX, where you know, we announced a top short-term top in the VIX a couple of weeks ago. Basically, we've been repelled at the high prices. I mean, the VIX failed to make a new high while the S&P made a new low, and you know, we're now backing off from a situation of overbought market condition. You know, in the daily time frame, you see the relative strength indicator at the bottom of this chart. This, in my opinion, suggests that you know, the VIX is due for a test of the 48.53 area in the weeks and probably months directly ahead. Again, all this intermarket picture with commodity currencies and the euro on the bid, yen crosses on the bid as well, and the VIX rather soft, suggesting, in our opinion here, that there's probably some equity market bounce rally getting underway as we speak. So I'm going to leave you with that, folks. I'm going to wish you have fun, happy trading, and we'll see you again next week. Bye now.